The flagship ARK ETF fund was the worst performing fund that was tracked by the Morningstar Mid-Cap Growth Funds ETFs that they track. And despite taking that crown as the biggest losing fund in 2022, Cathie Woods has actually doubled down on growth stocks and sort of like thematic stories. And so that's what I'm going to cover in this video, because it's absolutely phenomenal that she is not backing down on this. And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Now, as you guys already know, despite the fact that I disagree with Cathie Woods on a lot of the positions that she has, essentially we largely just disagree on valuations, and I think she's actually incredibly intelligent, and I agree with her on her sort of like long-term macro view. And so despite the fact that we disagree on investment philosophies and the valuations that we're willing to pay, I love listening to her because I learn a ton from her. And so here's what she had to say about the performance and the trajectory that her funds are going to go to in the future. So you can see here, this is the article that was released by Barron's, and so if you want to find it, this is the front of it, and it essentially says that the worst performing fund last year was the ARK Innovation Fund in the category of 189 mid-cap growth funds tracked by Morningstar. But despite that, she is not backing down, and so effectively what she's doing is she's doubling down on investments that got hammered last year, including Tesla, saying that they'll be big winners in the long run as they disrupt established industries. Now, guys, recall, Tesla is now trading at around $100 per share. Cathie Woods believes that this is a 10x to 15x stock, which I will show you in this video. And note, guys, that from August through December, investors in her fund actually started to give up, and they withdrew a net $600 million from ARK Innovation. But note that during the whole year, they actually added $2 billion. And so on a net basis, they are up for 2022, but I think this can really reverse. And I think the withdrawals could accelerate in 2023, or, something that a lot of people do with losses, if they've already lost 70 or 80%, they might just leave the money in the fund and see what happens. Like, at least you're not admitting that it's dead, right? But despite the seemingly acceleration of withdrawals, or at least I'm predicting that the withdrawals are going to accelerate, Cathie Woods is completely unfazed. Even as investors fled Tesla this past Tuesday on weak delivery numbers, sending the stock down 12%, she actually added to her position, which is kind of crazy. And so, she's saying that investors are running for the hills away from our strategy, and they're running to their benchmarks. And so she goes on to say, guess where there's more risk? It's in those benchmarks, because the traditional world order is going to be disrupted and disintermediated here. And so effectively what she's saying is that these thematic innovation stocks are going to replace some of the companies that people are going to for safety right now, which to a point I would agree with, but I just don't think that the whole world is going to get changed in 5 years, but I could be wrong. She urges investors to wait 5 years for her thesis to play out, but you can see how much the shares have come down over just the last 12 months. But what's interesting is just around, December of 2020, going into 2021, I started looking at all of her positions, and, I had an open mind. I really wanted to see what she saw, and just looking at all the stocks, I tried to build models on all of them and just sort of like really understand, get in her mind of what she was seeing. For all of the names that I were valuing, I just felt like they were multiples above what their fair intrinsic value was, in my opinion, at least. And so luckily, I never invested in any of them. And I do remember that, early in the early days of this channel, I had some people who signed up for the Patreon who just wanted me to tell them that, or support the valuations for the securities that Cathie Woods was investing in. And when I came back with models suggesting that, no, you can't be investing in these names, I actually lost those Patreons. And those were the first couple of Patreons that I had on this channel. But, I think truth prevails. And I'm really happy that I did that now in hindsight, because a lot of these names have come down so far. And so here's an article that she did put out on her own website on December 17th. So you guys might have missed this because, it was just right before the holidays and we just weren't in the mood for reading about stocks at this point. At least I think a lot of people were. My views were definitely down at that point. And so she's saying, perhaps influenced by negative headlines in the media and by the inherent volatility of our strategy, some clients have sold near the bottoms of market cycles, turning to what otherwise would have been temporary losses into permanent losses. So she's kind of like making fun of people who sold out. Basically, she's saying, you guys had paper hands and you sold out. Fine. Okay. We take advantage of volatility during corrections and concentrate our portfolios towards our highest conviction stocks. stocks. This is not new. Cathie Woods has been saying this for the last year now. And so year to date, our inflows have outweighed our outflows significantly, suggesting that on balance, investors understand our active managed investment process and long-term investment time horizons. The only thing that I would say there is that it might be a little bit disingenuous for her to write it the way that she did, because it's in the latter quarter in the fourth quarter where the outflows have really accelerated and they've outpaced the inflows. And so, she could say that on average, investors are confident. However, if you're getting outflows sort of like speeding up in the final quarter to the point where you're having net outflows, does that mean that people are still confident, or is that an indication that outflows could accelerate in 2023? So I just think it was a little bit disingenuous the way she said it, but she may not have meant it to be that way. I think she was just looking at the overall picture as well. I want to give her the benefit of the doubt, at least in this situation. Now, that is a long article and I do encourage you guys to read it, but I just picked out one piece of it where she said that the innovation stocks that she likes are not in a bubble. They believe that they're in deep value territory. And so, essentially what she's saying is she's kind of like shaming investors, at least institutional investors here, because she's saying that ravaged by the tech and telecom bust in 2000 and 2003, and then again by the financial meltdown in 2008 and 2009, investors, especially institutional investors, so shots fired, are much more risk averse today. And so investors seem to be hugging their benchmarks and looking to the past for future success. So effectively what she's saying is, one, they're not buying into the story, and two, they're just very skittish. Now, I understand why she would think that because she's such a bull, but I would say that I'm kind of like middle of the ground. Like, I didn't get burned too much by the dot-com bubble at all because I wasn't like invested at all. I was just learning about the securities markets at the time. And then 2008, 2009, I wasn't really burned there either. And so, I'm sort of like a future-focused type investor with very value-oriented principles. And I could, say, at least from my perspective, that it's not that investors are skittish. It's just that, there has to be a story that you can see. And so, when you make predictions on Tesla and you say, oh, like we're going to value this thing at $1,000 per share because they're going to have robo-taxis and all this other stuff. It's like, well, all of this is pie-in-the-sky stuff. If you talk to any CEO about, future vision and whatever, they're all going to sell you that pie in the sky stuff. So like, can you really fault investors for saying, hey, we'll see it when we believe it? Hell, when it comes to Alibaba, I'm a huge Alibaba bull. I don't even give them huge credit for growth in Ant Group until I see what ultimately Ant Group is going to look like once the regulation issues are dealt with. And so this is how investors are. And so for her to say that, she blames or faults sort of like investors for not believing in the pie in the sky story, I think once again, she's being a little bit disingenuous there, because that's how investors should operate if they're managing people's money. And I have to say that that last point is at least just in my opinion. Now, Woods adds that investors in her fund want her to follow a consistent strategy. When advisors and others buy into our strategies, they're looking for pure play innovation. They're not looking for a general strategy that has staples and energy. And so here's where I think the real story of all of this is. It's not that she's trying to courageously hold strong and not back away. I think she can't and will not diversify away from innovation securities, and hence why she was able to justify holding securities at very high valuations, and also why she values these things at very high valuations. And so, the whole thing is she's a pure play. And so it's just what it is. Same thing like with a gold mutual fund. The gold fund will always speak about doom and gloom. I remember there was this one guy once upon a time, maybe in 2000, Joe Rogan had him on the Joe Rogan Experience. And, the whole time, all he was talking about was like how bad the economy is and how things are going to blow up again. And he was saying this in like August of 2020, and everything had already gone down. And he was basically saying, things are going to get even worse, blah, blah, blah. And then, you do a little bit of research on his background. I already knew who he was, but you do a little bit of research on his background, you see that he is the owner of a gold fund. So of course, gold is seen as like a hedge when you're worried about inflation or you're worried about a recession. So of course, a guy like that would be doom and gloom all the time. And if you watch anything that he said over the last 10 years, it's all doom and gloom. And so, the same type of situation where like he's very doom and gloom. Cathie Wood is all about like, you know what, innovation, because that is what her brand is. So that's kind of, I think, what's really happening here. And I know that that's happening here because Cathie lets on just a little bit by telling you that you have to manage your risk yourself. She is not herself going to manage the risk for you. And you can see that here. She's saying that investors themselves can manage risk by selling some of their stakes after large run-ups. And, you know, she does nudge investors to do that sometimes. It never hurts to take profits and keep some powder dry. She said in early of 2021, where effectively she predicted that there would be a doozy of a correction at some point over the next year. Now, I will say that I was paying attention to her in 2021. In fact, I always pay attention to her. Even back then, she was saying when the company share prices were 3, 4, 5 times higher than they are today, she was saying that she's valuing them even higher. So yeah, she might have said for investors to take some off the top, but she also was saying that every name that she was invested in was super cheap. And so you're getting somewhat like double speak. I would understand if she said, hey, you know what? These stocks are closer to fair valuation, so maybe take some profit. But she wasn't doing that. She was still saying when they were at the top that they were very much value plays. Now, she goes on to say, talking about the macro, that we're going to see the other side of the sort of like macroeconomic environment now with falling inflation. And so she's saying that her thought here is that the Fed has sort of overdone it on the side of tightness, and that inflation is expected to drop below 2% at some point in 2023, and they will be reversing these moves. So they'll be reversing the interest rate increases. Now, on the call that I had just this past weekend, which is like our monthly call, one thing that I showed the participants in the call is that overall economists don't feel as though interest rates are going to decline in 2023. And then I showed them evidence from the Fed minutes as well, and articles related to the Fed minutes where, you know, they're also saying that they do not expect to reduce interest rates in 2023. In fact, they're worried to sort of move too suddenly, so they'll probably keep them on throughout 2023. So effectively, the majority of the economists and anybody who's looking at macro, including the Federal Reserve leaders, are all disagreeing with Cathie Woods right now. And so she's kind of alone right now when she says that she expects interest rate moves to the interest rates to decline. But, you know, economists are expecting interest rate declines in 2024 and in 2025. Goldman Sachs also is expecting inflation to come down considerably. But once again, they are also not expecting interest rate declines to happen. They're expecting interest rates to remain steady. So Cathie's alone when she says that she expects interest rates to decline. She might sort of trick you into thinking that other people think that, maybe, but nobody really is. And so just keep that in mind as you read these types of quotes, that she is really on the outskirts here right now. And there's nothing wrong with that. It's not to say that she's not intelligent or anything like that. You know, we can believe that she's a very smart person. She's looking at this information and she might have more information than we do, but we might also just respectively disagree. Like, in other words, I've been respectively disagreeing with her for a long time now. Now, Cathie Woods believes that a roaring 20s could be around the corner. And, you know, she thinks that there's a lot of platforms that are about to, you know, kick off or take off. The one is artificial intelligence, which, you know, I'll talk about in a second. Energy storage, which, you know, is a big bull for Tesla, robotics, DNA sequencing, and blockchain. Now, for AI, I'm very much a huge bull on AI, and this is one of my base cases for the cloud as well. And so this is why I'm a big investor in cloud. I just think that as much as we've made strides in creating more compute power and storage capacity, etc., there's such a hunger for more. And so I'm a big believer in this. Of course, I'm a believer in energy storage, robotics, sequencing. Like I'm a big believer in all of this stuff, right? But it just comes down to we still have to support the valuations in the near, mid, and long term. And so here's something interesting that she said. Its battery technology, or she's talking about Tesla, is much cheaper than its competitors and should allow the company to sell the Model 3 for $25,000 in the next few years, down from about $45,000 today, adding that competitors couldn't match that price without losing money. And so I think if that point is true, this is something that the Tesla bulls have not said in any of the comments to the Tesla videos that I made, but if this is true, and it's sustainable, it's a big bull case for Tesla. So, I think Cathie Woods does have that pie in the sky type of thinking. So I'm not going to believe her on this. But, if you guys can point me to any sort of like information or articles or anything where they sort of say that this is actually true, I'd be very interested to see that bull case for Tesla. Now, she's also saying that Tesla's close to launching robo-taxis, and she's predicting a nationwide rollout starting in 2024. That's kind of crazy considering that they have not even launched yet, and she wants a nationwide rollout in 2024. Once again, I respect her a lot, but I just think that this is really pie in the sky thinking. And so she thinks that the share price is will be worth $1,500 a share from the recent 110 in 5 years. And, I'm trying to be nice, but all I can say is WTF here. Now, Cathie Woods did say that in times of sort of like volatility on the downside, she will consolidate into her major positions. And so here are her major positions. You got Zoom, which I have a model for. You have Tesla, which I have a model for. And you have Roku, which I have a model for. That's what the highlight represents. But the one name that I do want to talk about in this video, because I recently talked about Tesla and I've recently talked about Roku, is Zoom. Let's talk about Zoom, because I don't think I've talked about that name in a long time on this channel. So I am a big bull on Zoom communications. I use it for my businesses as well. I use it at work, etc. And I think the company has had exceptional growth. However, things are slowing down, and I'll show you that next. So the question would be, how does this look for fiscal year 2023? And notice that they just reported fiscal year 2023, but you can see, over 100% growth for the first 4 years or so here, and then even in 2022 you saw 54% growth. Now, I do want to point out that Cathie Wood did say at the beginning of 2022 that yes, they had huge growth in 2021, which effectively represents fiscal year 2020, but they were also seeing huge growth in 2022. The point that I made was that it was slowing down significantly. And so what does this look like in 2023? I thought they had hit around 10% growth in 2023. Let's see what they actually are predicting. So remember, guys, I thought they were going to hit 10% growth in 2023, and then I thought they were going to do around 15% thereafter, maybe like 10 to 15. So I think I probably would have given them 12.5. But notice how they even came under what I was expecting. And so growth is seriously slowing. They just reported Q3, and outlook is that it's a 6.5% top line growth, and I do not see any indicators why growth would continue at high rates. And so this is the only way that I can value out the company. Now, the only thing that I'm giving them is a higher gross profit margin. They seem to have increase their gross profit margins by 1% in 2023. So I'll give that credit to them. So what I really expect is a undervaluation and a large margin of safety. And before we get into the valuation, I do want to say something nice about them. So notice how they're trying to create one platform for connection. And, I think I like the idea that they're trying to build out a super app. And if they and what I'm saying is that if they manage to integrate the Google Suite into this, I think they can really compete with Microsoft. But I think that's a big leap. And I think they're going in the opposite direction right now. So I like this team chat function that pretty much replaces Slack. I haven't used it, but I think that would replace Slack. And that's good because a lot of companies have Zoom, but they also have Slack as well. So if you can just get rid of your Slack subscription, that'd be cool. But notice that they are now creating mail and calendar. I think this is the wrong move. I think the right move is to partner with Google Suite and make Zoom primary, like Microsoft is doing with Teams, which is being packaged in with the enterprise suite of software. And so I think that if they try to go it alone, they lose, Microsoft wins. It's one of the reasons why I really like Microsoft. They have so many things that are going right for them, and their enterprise, they're not, losing any ground there as well. And I think Zoom is kind of making the mistake here. And so I think they will sort of like figure that out. I hope they do, but who knows? Also, I'm not an expert in the business. I'm an outsider looking in, so what do I know? Now, when it comes to the valuation, notice that I think the company's pretty fairly valued right now at $77 a share. The current share price is 69, so it's trading at approximately 90% of its intrinsic value and trading at 18.3 times earnings. But remember, guys, earnings are growing slowly, so this is fairly valued. But note that they have a fantastic balance sheet with zero debt. So if the share price declines in a mass fear move, this might actually become an exceptional opportunity, similar to Alibaba when it's trading at close to cash per share. And so the point that I'm making is that there could actually be some very interesting cash secured put opportunities if there's a lot of fear in the market for this type of company. And so just keep aware of that. I'll probably keep an eye on it and see if there's something, because, ultimately I think that, this will always just be a duopoly. I think it'll just be Microsoft Teams and Zooms, and I think there'll be sensible pricing, et cetera, et cetera. And, people just get used to Zoom. Like, my teams are just used to Zoom, so we'll just be using Zoom here on out. The pricing is fine. There's no issues with it. And so I think if the share price really crashes, there could be some form of opportunity here, but we'll see if that happens. Now, the question is, I just walked you guys through the Zoom model, but how do you get access to that model? Well, you can get access to that model, the Tesla model, and all of the other models that I talk about, including Alibaba, Tencent, anything else, Roku. You can get access to all of them at this lower tier. And if you want to join us for an epic live presentation each month where I talk about the macro and then I go into interesting opportunities, you can join us at this higher tier. Now, I didn't mention Tesla in this video, and I didn't walk you guys through the Tesla model because I have covered it recently. However, if you are interested in getting a better understanding of the Tesla valuation and how I walked you guys through to the conclusion that it's not an opportunity that I'm interested at the current share price, even though it's at $100 per share, you can get access to that video right here.